the comment that housing is for living and not for speculating came from none other than Xi Jinping, of course. Look, it's in the context of a Chinese real estate and development market that has been the subject of a lot of speculation, a lot of news reporting of recent times, and rightly so. You've got to understand housing in the Chinese context. It's the only game in town. It's the biggest game in town. We're talking about an asset class which is the largest investment asset class on Earth, which Xi Jinping might not enjoy it being called an asset class because, of course, they're for living in, but nonetheless, it's 66 trillion US dollars worth of asset value there. And what you find is that for a lot of Chinese households, it's essentially a really good way to store wealth. It's a really good way to protect against inflation. And what we've seen is a approach culturally from an investment standpoint to actually put your savings into housing. And very often, of course, you've got the very unique Chinese approach from a cultural standpoint where that housing isn't necessarily used for investment to derive rental income. Generally, these houses are kept mint in box or in pristine condition, unused. And that's what's really driven a lot of the activity that we've seen over the last decade. So, essentially, again, we're talking about 66 trillion in asset value, but we're also talking about 60 to 70 million of untenanted dwellings. The issue with 60 to 70 million people, and bringing it back to Xi Jinping's comment that they are for living in, well, clearly they're not doing a great job living in them if there's 70 million of them where no one's living in them. So think about that in the context of 6 to 7 million people needing to find new homes every year. So the rate of household formation is at about 6 to 7 million, which in the context of 60 to 70 million uninhabited dwellings is a stock of about 10 years worth of demand. That said, those houses, they're not for sale and they're not for rent. So you still need to actually continue to create this flow. Now, the reason why for living in becomes very important is because this all forms part of the Chinese Communist Party's common prosperity mantra, which rises at a time where Xi Jinping is looking at his third term. And housing is really just one of those real pain points, one of those real pressure points for the burgeoning middle class of Chinese citizens. And so essentially the focus is now on protecting the rights of the Chinese middle class, dealing with the question of enormous inequality, in terms of wealth inequality, in terms of what the top 20% in China earn versus the bottom 20%. There's greater inequality in China than the United States, for example, which would surprise many. So, housing, education, all of it sort of comes through together, and it's clearly something that the Chinese Communist Party is focused on addressing. The Evergrande credit story and the Chinese real estate credit story more broadly has been something that's front of mind for most investors. The fact of the matter is that the Chinese real estate market in US dollars, the corporate bond market that is, has grown to some significance over time. Evergrande are the biggest issuer within that market, but there are a range of other issuers also, and we're talking about a significant amount of money outstanding. It is by far the largest sector that issues into the US dollar market, has a large following within the broader ASEAN region, so a lot of real money investors within Asia, a lot of private bank clients are heavily invested within these Chinese real estate developer names. And the dollar amounts are big. In the context of Evergrande, we're talking about 80 billion or so US dollars in debt. It has the capacity to hurt a lot of people. That said, it does feel reasonably well contained, which a lot of people find strange when we talk about the numbers. Because look, the fact of the matter is that the US dollar corporate bond market is it's the tip of the iceberg when we're thinking about Chinese real estate and developer debt. The real story is within their commercial paper market, which is their onshore funding market, which is a market that is essentially funded by wealth products. This market is at around 12 trillion, 13 trillion. Saw about 500 billion US dollars worth of issuance last year alone. The reporting around this market is pretty weak. Essentially you have property developers issuing this commercial paper to do everything from provide the capital for new developments, to pay for raw materials and just about anything else. The investors within that space are Chinese citizens. They buy the product through wealth management products that are generally facilitated through their banking sector. Okay, that said, the connection to the outside world is weak, and that's why a lot of pundits, a lot of people tend to feel that it's something that will wash through. That view is because the connections between that Chinese onshore market and the Western banking system, a lot of the problems are self-contained, and they've become really adept at swallowing a lot of poison and pushing it out a long way. If what is going on over there was going on in Australia or the United States, these property developers would almost certainly now be unbankable. There'd be real concern around how the millions of pre-sales that have been sold and not completed are going to get finished. And you'd essentially be talking about a systemic crisis, but not in China, right? Not in China. What happens there is that they go through and start to try to figure out who the losers can be, who gets through, keeps their skin, and it's as you would expect it to work within a command and control economy. Your over-indebted Chinese developers are going to have to actually sell those developments to state-owned entity or other high-quality developers who will then finish those projects. Okay, so you've bailed those guys out. The next question is going to be what you do to the commercial paper market. What about all these people holding wealth management product that have shown up to their Chinese bank and when unhappy with the rate of return available on deposit have decided to take the wealth management product instead? Well, you'd argue that they might be okay as well in the context of Chinese common prosperity and wanting to protect the middle class. So now we can see what our priority is. Our priority isn't necessarily keeping Western capital markets happy, keeping bond investors that are speculating in the names of Evergrande and in the names of the various other investment grade and sub-investment grade Chinese names like your Sunax or Country Gardens. It's not them you're trying to protect. That said, you have put a lot of work into attracting foreign capital into your markets. And it doesn't necessarily make sense to set it all on fire either. Okay, so from that perspective, you're going to look to provide enough oxygen to keep the thing together and maintain some level of confidence. Clearly, there's a real bifurcation now, so we are starting to be able to clearly identify the winners and the losers within that broader Chinese US dollar corporate bond context. But it wasn't so apparent even a week ago. A week ago, your apparent investment grade names were trading at between 60 to 70 cents in the dollar. They've all bounced as of today's date, and they're trading pretty much near par again. Not all of them, though. Of course, Evergrande is still trading where they were trading. They're still sitting there at 30 cents in the dollar, and so very clearly there will be some losses to be doled out. But just don't expect the capital structure to work like it works in a normal capitalist environment, and that's where, as an investor, you have to be okay with that. For the rest of us, the linkages are weak. Again, the Chinese banking system is big. As I alluded to earlier, it can swallow a lot of poison, and it can stretch problems over a very, very long period of time.